You're hustling to grow your business and taking care of your accounting has been an afterthought. You're not sure what's revenue, what your expenses are, and you definitely don't know how much money you made this month. And when you do actually go to take care of those expenses, there's a pretty good chance that you're going to end up coding those transactions to multiple different accounts in your profit and loss statement, making it so that if you actually did go look at your financial statements, you're not going to be able to make great decisions because the data is not going to be consistently recorded. If you think that this might be you, then you're definitely not alone. This is probably one of the most common issues that we see from business owners and even other bookkeeping companies when we take over another company's books. In today's video, I'm going to discuss this powerful bookkeeping hack that my team uses to improve the reliability of our clients' financials so that you can stop guessing and start scaling your business. I'm James Masotti. I'm the owner of Our Team Accounting. I'm a real estate investor and the owner of Crystal Clear Property Management. And on this channel, I am passionate about helping business owners achieve their personal and professional goals through intentional financial planning. Let's go ahead and dive right into today's video. All right, so to kick things off, let's talk about the biggest mistake that a lot of business owners and their bookkeeping staff ultimately end up making. And that is the fact that you get to the end of the month and you're sitting there and you're scratching your head and you're going like, shoot, I gotta get all that bookkeeping work done, right? Yeah, like not good, don't do that. Because then what you end up doing is you just sit there and you're like, what was that Amazon purchase? Oh wait, do I have a receipt for that thing? Oh crud, I've spent so much money at this place, I can't keep track of what projects these were all for. And so if you find yourself going through that very painful experience, and this is why your bookkeeping feels such like a big heavy lift every single month, and it's why as a result you sit there and you're going like, all right, I'm going to code this transaction, and then I'm going to code this transaction, and then I'm going to code this transaction. And because you've done that, what you end up doing is you end up with these expenses all getting put into different places because you don't have a system that you've built out to allow you to reliably and consistently post transactions into the proper locations every single month. As a result, you could end up having transactions coded to software and to marketing and to office expenses when in fact, they're all the same thing. And so when you go to do a deep dive into figuring out, where you're spending your money and where are you overspending as a percent of your revenue and are you getting good returns, if you're sometimes putting an expense into marketing or sometimes into software or sometimes into office expenses, it's going to be really hard to, for example, do an analysis of, hey, am I getting a return on my marketing spend if what you've put into that marketing spend isn't actually marketing, it's actually a software expense that you're using. So these are things that are really important to really kind of be clear and understand what it is that you're using something for. And then, have a system and have a process for being able to differentiate different types of transactions. So now that you have the opportunity to think back on how you do your monthly process for coding your revenue and your expenses, what has been your biggest pain point or your biggest challenge in keeping up with all of that? Go ahead and drop a comment below and we'll go ahead and review those and maybe we'll even make another video about it in the future. So now we're going to talk about some of the things that my team does in order to really set us up for success and make sure that we are consistently coding transactions every single month. And the first thing is that we don't do it every single month. As a matter of fact, we go ahead and we do it every single week for our clients. And the reason for doing this is simply the fact that it's a lot easier to remember what you've spent when you only have to think back over the last 5 days, rather than having to think about something that happened 3 or 4 weeks ago. Another pretty common thing that we see that folks do is that they set up rules and they have those auto posted. Rules should only be used as a guide, and there are absolutely scenarios where we set rules up to have as a reference and make it a little bit easier to be like, oh, that's what this transaction is typically coded for. But there's a lot of things that you kind of need to make sure that you double check. For example, living here in Southern New Jersey, we have this fantastic place called Wawa. If you've never been to the Northeast and as they grow on the East Coast, you don't know what you're missing out on. And if you're from Texas, Buc-ee's is even like a whole bigger thing. But what I'm getting to is you can go to these places like whether it's Wawa or Buc-ee's and you can get gas and you can have a transaction for Wawa and it could be for $70, $80, $90, $150 for your gas expense. Or you could go inside and you could buy yourself a cup of coffee and a donut. And both of these are going to pop up transactions for Wawa. And if you have those auto-coded to be going into your fuel or your vehicle expenses, then I know we say we can run on coffee, but that's probably not what's actually fueling your vehicle. So speaking of that, you've got these rules set up. One of the things that you can do in QuickBooks Online is that you can look at the categorization history. So inside your bank feed, when you pull something up, there's a button that you can click and it'll show you where you've categorized that particular item in the past. So this is a great way to make sure that you are consistently doing that, because if you click on that button and it says that you've got transactions going to multiple different places, again, we just adjust. Sometimes that might be appropriate. We talked about Wawa. Sometimes you're going to see food expenses and sometimes you're going to see fuel expenses. And so seeing a split there, that would make sense. But if you're going into a categorization and you know, like, okay, this should always be the same thing. So for example, like a Canva expense, like, well, Canva is only a software that, allows you to make digital assets, right? And so when you have that expense come through, if one month you're putting it to office expenses and another month you're putting it to software and another month you're putting it into marketing, then, that's not really the getting you that answer that you want. And that's where that categorization history can be really helpful to make sure that you either find those outliers or just to avoid them altogether. The next thing that we do in order to really help make sure that those books are being super clean and are easy to kind of pull apart and digest is to make sure that every expense that comes through ultimately has a vendor assigned to it for tracking purposes. And the reason that we go ahead and we do this is a couple of reasons. One is that when it comes to the end of the year and you need to be filing 1099s, making sure that you have accurately reflected all of the money that you have spent with different folks is going to help you really identify the 1099s that you need to send out to your different vendors and suppliers and things along those lines. Perhaps one of the other key things is that you're going to be able to go and run a report in QuickBooks Online by vendor, and you're going to be able to see all of the transactions and where those transactions got coded. So again, if you think that you maybe had, missed something or you're trying to do an audit, you can go through and you can look at all of your vendors and your vendor transactions and make sure that they've been coded to the same place. And if they aren't, and they are coded somewhere else, that you have the backup information, backup documentation, those receipts, invoices, whatever it might be, available so that you can double check and confirm that you have in fact needed to code something to a different location on your P&L at some point in time. All right, so we're going to go through a couple of examples of how needing to have rules and having a system and a process that you can document is going to be important to making sure that you get your transactions coded into the right places. An example we've already gone over was Canva. Another possible example would be, for example, a lot of food stores also sell gas, right? It's been an increasing, more common thing. If you have, a Costco membership or a BJ's membership, you can get gas, Sam's, similar kind of a thing. And so you might see expenses for Costco, but there's a difference between Costco fuel and Costco regular. And so being able to differentiate what transactions are for which places so that we can code fuel separate from groceries or things along those lines would be really critical. Then you have to identify ones where, they realistically always need to be going into the same place, right? So another example of this would be like Zoom, for example. So like if you have a Zoom subscription, maybe you want to consider that a subscription fee. And so it always should go into subscription rather than going into your software one month and then subscriptions another month. So just being able to kind of review all of your expenses, all of your vendors, and being able to kind of think about how you go through those things so that you can create a decision-making or a rule-making process for you. And ideally, if you're offloading any of this work to a third-party bookkeeper, that they also know what those rules are to help them in their classifying process and avoid putting a whole bunch of things into unclassified expenses so that you then ultimately end up having to do the research to tell them what those things are anyway. And so now that you've gone through this rulemaking process, you can go ahead and you can do an audit, as I already mentioned, if you've gone through and coded everything with vendors. If you haven't, then you can absolutely go through and look at all of your transactions and you can go through, you can add that sort of stuff in. But this is a great opportunity to really get your books cleaned up so that you can actually do that deep dive and look by category as a percentage of your overall spending or as a percentage of your revenue to actually go through and say, do I really need all of these tools? spending all this money on marketing, am I actually getting an ROI for the dollars that I'm spending, right? Do I have a process for tracking the leads conversions that are coming through from those different sources? Those are just some things that, when you look at and you make sure that everything is being coded correctly to the proper vendor, as well as to the proper account on your P&L, that you'll be able to make these kinds of decisions and then be able to implement something that might actually help improve your business. So now that you've got a system set up to consistently record your revenue and your expenses every single month, it's time to start thinking about your cash flow in a way that is going to be not super stressful or confusing at all. So go ahead and click on this next video right here, and we're going to show you a system and a process that you can use to do that. I look forward to seeing you there.